Hey everyone, welcome back. So today's Monday. It was obviously a pretty bad day in the markets. Bitcoin was down quite a bit. We'll take a look at that, see what's going on with that. We also have a story from Ethereum. They are out testing a new testnet, basically, I believe. And it's one step closer to getting us to proof of stake. So we'll take a look at that. We also have UBS providing a prediction as far as what the CPI data is going to be like tomorrow. So we'll take a look at those numbers. They don't look good. I think that's kind of what's causing the drop in Bitcoin and also in the markets. And then we also have Luxxfolio has provided their March update for their productions. We'll take a look at that, look at my numbers. And as always, we'll look at other things as well. So obviously not financial advice. You know the drill here. I'm investing in the following coins and companies. And let's take a look at the miners here really quick. And then we'll take a look at Bitcoin and Ethereum, see what's going on there. And then we'll get into the stories. So obviously, any Sphere 3D was actually up today a little bit. It was up 3.33% on the day, which is surprising considering where Bitcoin was at today. It's down a little bit in the after hours right now. Argo was down 6.55% to 84 cents. Bitfarms was down 2.2% to $3.11. Cleanspark was down 3.84% to $10.01. And Core Scientific was down 2.28 to $8.15. Digihost was down, quite a bit, 9.33% to $3.11. DMG was down 6.4% to 46 cents. Hive was down 3.24% to $1.79. Hut 8 was down 2.56% to $4.57. Iris Energy was down 4.46% to $13.06. Luxxfolio was down 11.74% to 23 cents. Marathon was down 3.35% to 21.92. And Mawson was actually up today 2.88% to $4.29. And Riot was down 4.62% to 15.91. Obviously not a good day in the markets here. Let's take a look at Bitcoin. So over the weekend, I talked about this a little bit, that Bitcoin may come down in the short term. And, I didn't think it was going to happen this fast, but it obviously happened pretty quickly, especially today. We were kind of trading sideways here over the weekend. And obviously today, investors were basically ready to pounce, and they took Bitcoin down quite quickly. So throughout the day, and you can see it here, every hour was just going down on it. So we did kind of test the support range here around 40,700. We tested it once, twice, and then we battled with it a couple hours here, and then we finally fell below it and continued falling further. The only good thing that I have out of this is the RSI has come way down on the daily chart. The last time we were down here was on 25th of February, and the price at that point closed at 38,400. So that's basically about $1,100 difference in that from the RSI. So the only good news is we'll have a little bit maybe more room to run up once we do turn around, if we do turn around, depending on what the CPI data is like tomorrow. Ethereum, same thing, was down below the 3,000. It is now below, obviously, the 50-day moving average, which had crossed it today. Let's take a look at the 1 hour chart. Crossed it a lot earlier this morning, so it was about 4 o'clock in the morning or so when it crossed over that, and it just kept falling down ever since then. The only thing that's kind of concerning on the 1 hour chart is the RSI has obviously come up a little bit, so we'll see if this continues going up or if this is just like a fake out and then we continue going down even further, which could be the case for both Ethereum and Bitcoin. All right, so let's take a look at see what's going on with Ethereum first, and then we'll get into Bitcoin, see what's possibly causing this. So Ethereum's first mainnet shadow fork goes live as move to proof of stake continues. And there's some interesting things here. So Ethereum's first mainnet shadow fork went live today as the developers of the world's second largest cryptocurrency by market cap continue transitioning the backing network to a proof of stake model. The shadow fork is a way to stress test our assumptions around sinking and state growth, tweeted, I'm not even try pronouncing this name, I'm sorry about that. An Ethereum Foundation developer on April 10th, he added that it will also provide a way to check if our assumptions work on existing testnets and or mainnet. Continuing on, the shadow fork will share some of the data with the main Ethereum networks. Some of the transactions could appear on both chains. Jay Athani cautioned the shadow fork has already processed 1.166 million transactions with an average block time of 14.8 seconds as of time of writing, according to a Block Explorer page shared by the developer Marius van der Weijen. So that's good. The outcome of the shadow fork is a key to determining the timing of the final merge, said Ethereum developer Tim Bako, according to Galaxy Digital Research associate Christine Kim. And then obviously this is a historic event. And in mid-March, another key milestone was reached with Kiln testnet merge when a proof of work execution layer merged with a proof of stake beacon chain. This was scheduled as the last merge testnet before the final move to proof of stake. According to Jayathani, the Kiln merge testnet was designed to allow the community to practice running their nodes, deploying contracts, testing infrastructure, etc. The shadow fork goes a step further to stress test the network, he said, which is good. So we'll see how this all plays out. And that is it. So obviously we're getting one step closer to having that proof of stake system be implemented in Ethereum, which is a good thing, which I think is also going to drive the price up higher, as a lot of people also think that might happen. Okay, so that is for Ethereum, which is good. Let's take a look at Bitcoin, see what's going on there with it. And Bitcoin falls below 40,000 for the first time in almost a month as investors assess global macro risks. So the price of Bitcoin stumbled on Monday as investors assess the risks from rising rates and the potential for more tightening by the Federal Reserve. Obviously, we have the CPI data coming out tomorrow, so we'll see what that is like. The decline came after the 10-year Treasury yield hit a 3-year high of 2.78% Monday. Riskier assets tend to fall when yields rise. Bitcoin's obviously a riskier asset, as seen by investors right now. Nasdaq Composite was down more than 1%, though Bitcoin should trade independently of the stock market. A correlation between the two has been particularly high in the recent months, and that is possibly because people are just a little bit skittish right now. Bitcoin and traditional markets have continued to respond negatively to expectations that the U.S. Fed will tighten its monetary policy to fight inflation. And Tuesday's CPI release seems to be weighing heavily, said Riot, a research analyst at Kaiko. Globally, the continuing war in Ukraine and increasing shutdowns in China are dragging on the markets. So that's obviously causing a lot of fear in the markets. And let's take a look at one more story here. This one's from Cointelegraph. So Bitcoin price drops to 39K, but data shows leverage traders dreaming at 50,000K. So there's obviously, trying to give you guys a little bit of the bear news and the bullish news here. So let's take a look at this factor here. So multiple factors are pushing BTC price below 40,000, but derivatives data shows pro traders are neutral and holding out hope for a quick trend reversal. According to analysts, the United States Federal Reserve balance sheet reductions are adding pressure to stocks and risk assets, with Bitcoin standing to lose appeal. A Decentra trader co-founder Philip agreed with these powerful headwinds by arguing that the Fed's actions could influence the BTC price trend for months to come. So there's another also article out there about somebody saying that Bitcoin could be at like 30,000 by June, which is it's possible. We just don't know. But we'll see how this obviously plays out. Bitcoin reacted unfavorably to a resurgent dollar, with the U.S. dollar currency index DXY returning above 100 for the first time since May 2020. While some consider the DXY event a temporary show of strength, its impact on crypto markets was clear. So you can see here, here's a chart for OKX, USDT, BTC margin lending ratio, source OKX. And the above chart shows the traders have been borrowing more USDT recently, a fact shown by the ratio increasing from 9.6 on April 8th to the current 15.9, which is the highest level in 2 months. So crypto traders are usually bullish, so a margin lending ratio below 3 is deemed unfavorable. Thus, the current level remains positive, just less confident than the previous week. So you can see that. And then we got different buy and stop trader long, short ratio positions. And we can see it here on this chart. And then you got the OKX top trader long, short ratio positions. And you got the Huobi top trader long, short positions as well. So continuing on, it's possible to have a glass half full reading from the same data because Bitcoin price dropped 15% since March 29th, and yet there is no sign of bearishness from the margin in BTC futures trading. From the perspective of derivatives, traders are playing it safe, but also still hopeful that 50,000 and higher is possible in the near term. All right. So obviously a lot depends on how things are going to progress with the CPI data tomorrow and things like that. So going into that, let's take a look at the UBS prediction inflation. So UBS prediction inflation has peaked, but warns that the March's consumer price index will still be really nasty. So on Wednesday, UBS warned, this is from last week, so UBS warned investors that the March inflation read set to come out on April 12th, which is tomorrow, will likely be pretty ugly. That's saying something considering the consumer price index already hit a 4-decade high in February. The last time we were at this high, I think, was back in 1981. So the investment bank economists, led by Alan Detmeister, predict the annual rate of inflation as measured by the CPI will move to 8.5% in March, which is huge. Last month we were at 7.9, so an increase to 8.5 is really, really bad. We'll see if it actually plays out that way. Tomorrow we'll obviously get the data, so we'll have a video on it as well. So look at what's actually causing the CPI data to go up, if it went up. I was thinking that possibly we would be peaking in March and possibly going down. Or we would peak in February and going down from March forward on, just based on what I was seeing in the CPI data from last year. We'll see if my thoughts were correct on that or not. Here is the year-over-year percentage change in CPI. So the percentage change in the consumer price index, including USB's estimates. So they're at 8.5 here for March, April about 8.72, and you can see it coming down throughout the year. I was thinking that the peak was going to be in February, and then we slowly started trending down, but they're saying approximately March could be obviously the worst one here. So the data tomorrow will be really interesting to take a look at. Over a large part of the past year, UBS inflation forecasts were well above consensus expectations on Wall Street, and so far they've been right. So that's obviously kind of telling a sign. We'll see if they continue to be right on that. Inflation data has repeatedly surprised to the upside, moving to highs many experts, including those at the Federal Reserve, simply weren't predicting. Right, so now UBS is calling its shot once again, arguing inflation will peak in March and move down sharply from there as consumers shift their spending to services and used car prices, which have been sky high throughout the pandemic, begin to drop. So that'll be obviously interesting as well to see if that actually plays out that way. Continuing on here, when it comes to core CPI, measure that strips out the volatile food and energy prices, UBS economists said to expect a 6.5% year-over-year increase in the next Tuesday's monthly inflation report. But from there, they believe a steady decline will follow as supply chain constraints ease. It all depends on what's going on in China. They have obviously a shutdown in a pretty large city because of the pandemic. And then obviously, continuing on here, housing prices increases, which make up almost a third of the basket of measures used to create the consumer price index, will also begin to moderate moving forward. The economist said, lending to a slowdown in the core inflation. And I believe that was it. That was really interesting in here. So as far as housing is concerned, there's two stories to this one. It's kind of depending on which part you take in. So there's one side that thinks that with the rise of the interest rates, that's obviously going to cause possibly a housing crash, right? Prices are going to drop drastically. But there's also another part that says, yes, prices will probably slow down increasing, but we may not see a huge decrease. We may see a 1 to a 5% decrease for several reasons. There might be, right now, obviously, we're not in the same spot that we were in 2008, right, when we had the housing crash. And that was led by, obviously, loans that were made out to people that shouldn't have gotten loans in the first place. You also had balloon rates. You had, people just going crazy with flipping houses and everything else. And we also had a huge supply of houses. And then we obviously had a lot of people going into bankruptcy and foreclosure because they just, they were underwater as far as the values, as the prices continue to drop and the values continue to drop and drop. This time around, banks are a lot more stringent as far as who they are lending the money out to. There's also a supply shortage right now of houses, especially new houses that are being built and put in the market. As long as that continues and we don't have an overabundance of supply, I think we may see a little bit of a downturn, but I don't think we're going to have a huge housing crash. But this is my 2 thoughts, my 2 cents on that one. All right, so let's take a look at Luxxfolio here really quick, and we'll call it a day. So Luxxfolio obviously provided their March update. So Luxxfolio is pleased to announce the completion of phase 1 of its New Mexico mining site expansion, resulting in an additional 31 petahash coming online. The latter part of March, the company's total hash rate is currently at 170 petahash, an increase of over 22% from previous month, which is good. Obviously, the 22% increase looks a lot bigger than what it really is. 31 petahash is obviously small compared to some of the other miners that I cover. It's like Riot, and some of the other guys have had a lot bigger increases than that. But based on where they are, where they're going, that's a good increase. Mining overview. So Bitcoin mine site operating at 170 petahash as of February 28, 2022, or February last month. February was 139 petahash. Total Bitcoin mining mined of 20.07 and then 19.7 in February. Bitcoin equivalent reserves at the end of month was 66.9. And then final completion of the expansion is scheduled to be completed by mid-May, which will take total capacity of 15 megawatts of the system here. Other interesting things, estimated calendar miner delivery and installation dates, Q2, which we're in right now, about 1,400 miners, which isn't much, and then Q3, even less, of 300 miners. So really like to see them get more miners in, obviously. All right, so let's take a look at the numbers I have for them, and we'll call it a day. So Luxxfolio currently is one of the smaller miners that I cover right now. Why does it say Digihost? It should be Luxxfolio. Nobody told me about that. I made a mistake here. Luxxfolio. Okay, so we got Luxxfolio in here, and current hash rate is 170 petahash. Future hash rate is only going to be about double that, to 353 right now that they have reported. So here's what we have for March. Obviously, was 20.07 Bitcoins mined. That's a value of approximately 913,000. It is a slight increase over February. And we did find that on an institution side, we have one institution that bought some shares, about 1.5 million shares, and it's basically 2.75% owned. We have also one analyst initiate coverage, it looks like, with a buy rating and the price target of 95 cents, along with an average and low right now. So looking at March here, they roughly installed another 310 miners here of the 100 terahash miners. And that got them up to approximately for March, I got to change that to about 20 days roughly mining. So about 1.05 million or so. And from the GPUs, I'm guessing it's 46,000 roughly. Okay, and then as far as their HODL position is concerned, they did report 66.9. Obviously, they did sell, it looks like they were at 89 or something like that at the end of February. So it looks like they sold part of it. Obviously, Bitcoin's down now, so it's about 2.6 million in value, which is about 15.7% of their market cap, and each share of their value is 4 cents, is basically Bitcoin HODL value. Looking at the numbers that we have right now from the last 3 quarters plus the first quarter for January, February, and March, we're looking at a combined total of about 6.7 million. Using the price to earnings multiple of 10, and then we're taking 75% net income from gross revenue. I'm looking at about 72 cents is where they should be. They're at 24 cents, so obviously undervalued in my opinion. Shares outstanding is 70.5 million, which isn't bad either. And obviously current hash rate, they're approximately 48% installed already. So they are, like I keep saying, they're one of the smaller miners that I cover here. So they obviously have room to grow, and it would be nice to see them at least get up to 1 exahash by the end of the year. I don't know if that's going to be able to happen, depending on what they provide us as far as news is concerned. But right now, looking at them, they're approximately at, what is that, about price to earnings multiple of 4 right now from where they should be. Some of the other miners are obviously higher than that. I'm giving them a 10, just to be kind of fair a little bit, since they don't have a huge growth, and maybe even 8, maybe 57 cents or something like that. So that is just the information I wanted to provide you guys with right here. The good thing is obviously their hash rate per miner on average is about 96 terahash, which isn't bad. But yeah, small miner. The really thing that I'm looking forward is seeing if they provide any other updates as far as if they're buying anything else as far as new miners are concerned, whether it's the Intels that are coming out possibly, or some of the other ones that are coming out as well. But that is it. That is all I got for you guys. Obviously, tomorrow's going to be interesting with the CPI data coming out. We'll see what that provides us, and then see how Bitcoin reacts to it. I think if the CPI data is going to be low or lower than the 7.9 or the 8.5 that UBS is reporting, we may have maybe a spike in Bitcoin price. Who knows? We'll see how it's going to play out. It's too early to tell right now what's going to happen with that, and we'll see if anybody else. Oh, also we're waiting on just Mawson to provide their numbers for March, and then we'll have all the miners here covered already, and then we'll do a miner versus miner, see where everybody stacks up and where they might be going forward. So that's it. I hope you guys enjoyed. If you did, hit the like button and subscribe. Also helps me out tremendously. The spreadsheet, as always, is available to my Patreon members. You can get it there. And that's all I got for you guys. Have a wonderful evening. I'll see you in the next one. Until then,